Hello everybody, welcome back. So, it was only a week ago yesterday that we came down to Wrecked City. Now we're in Pump City, bullish engulfing candle at the moment. This weekly's looking pretty good. So let's discuss bottoms and not in the sort of, I suppose, the carry-on sense of the word. Let's think about, hang on a minute. So we have a neat consolidation pattern with lower highs, lower lows. We made an assumption that if there was going to be a decent reaction, it would take place from here. We had this box of significance. We also had this trend line of the consolidation that said, well, there is a chance that, we do sort of bounce from this area. And there we have it. We do see a bounce from the area. We've now reclaimed the majority of moving averages, and if we can just stay at this level or higher, we will avoid a exponential moving average death cross. If we start closing down below 59,000, we will likely receive the death cross, but at the moment it's not looking too bad. So let's have a look at the 4 hourly. 200 simple and exponential have now been burst through. So this is where we were yesterday, talking about how, if you're going to get rejected, it'll be rejected from here. Smashed right through that, and at the moment we're cooling off, most likely to get picked up on any one of these moving averages. I mean, your choice is, it's up to you where you go for. If, of course, you believe in buying the dip in the hope that we're going to continue up with this trajectory momentum. So speaking of momentum, what do we have? No real reason to be concerned on the RSI, nor really on the money flow index. This is and could be classed as bearish divergence, because it is, but it's also a breakout of descending momentum. So, a descending volume. So I would go as far as to say that this one looks like it wants to try a little higher based on the 4 hourly. Pump signal here on the Ichimoku cloud also. So the question is, did you buy this low, or are you waiting to enter into it? And, if we are waiting to enter into it, what's the risk? We've discussed potential bottoms. What about potential resistance? So, when in doubt, zoom out, look at the weekly. What do we got going on this weekly? So the weekly is pushing a 21 exponential moving average, which, is like the center range, really. We've got two of them, 21 exponential, 20 simple. 20 simple sits up here at just below $63,000. It would be a significant place to move up to and then get rejected from. This also serves the same purpose, a 21 exponential on a weekly. You can see that historically it does get retested, whether you're bullish or bearish on that. It is the case. So here's the bear market, for instance. Bang. As soon as you came up to retest it, bang. Tried again, bang. Never to be seen again. Not until recently, really, until February this year. So, it does cause an issue when being below it. Also, here's a good thing while being above it. You can see, bang, retest, boosh, all the way up. So look, we are below it. So resistances are something to focus on and think about, because if you're buying a resistance, you really have to be massively bullish, to want to buy a resistance. So let's have a look over here if there's anything else that we can discuss. I mean, currently, this does and is bullish divergence, almost ready to fully confirm and in historical fashion put in the bullish divergence low on the weekly MFI. So, whether we get rejected here and then come down at this point now to make a higher low is probably the better way to try and interpret this chart going bullish for the next week, and maybe the next month, and perhaps maybe the next few months. And there's evidence for that. There is more. There is more. Let's have a look at the S&P. So the US 500, this was our expectations generally. So we've got highs, we've got lows, we've got slightly lower highs, double top almost, and then we got a move back down. And where did this bounce from, by the way? I think we all know. Classic stuff. A 21 exponential moving average, kapow, back up to the top. So it's not a fully bullish engulfing candle, but it's definitely decent response. Sometimes you can just, the most simplest things can prove to be the best, and a simple Bollinger Band, really, a lot of the time, gets it right. So this is, you could call it an ascending triangle or a rising wedge, whichever way you want to cut it. It's a formation, right? And with a formation, you have invalidation and validation of the trade setup. So if you were to break out of here and continue up, especially if you were to break out, retest the support and go up, it's a breakout trade. This is the opposite. If we close down here and go down, it's a breakdown. So, you know, you're looking for this formation to maintain its formation and price action to live within it until it breaks out, and that gives you the confidence to carry on, so long as momentum's good. At the moment, we've got a lot of bearish divergence and one drive of hidden bullish divergence. I would say that it's more likely to get rejected here into next week, but again, we could be looking at a rate cut. There is that chance. It's a chance, it's not a guarantee, it is a chance. We were talking about it on the Patreon live stream last night, and basically, what's the evidence for it? Not really sure, to be honest. You know, why would they do it? You know, is there any need? Is inflation back at 2%? I know that when the UK reduced its interest, it was because the inflation had gone back down to 2%. The reason you want to reduce that rate is so, I suppose, if anything, you sort of bring the inflation back up to 2% or maintain that 2%. If you're not at 2% yet, I suppose that's one of the main things to focus on. Are you at 2%, America? No, you're not. You're not. So why would you do it? Because, you know, if you raise lower rates, you're likely to increase inflation anyway, all right? So do you want to do that? Do you want to increase inflation? What are you trying to do? What's the point of it? So I'm not going to pretend I'm sitting in the back of a Fed meeting or anything like that. I'm just, you know, there's a goal. It's pretty clear. They say what they say, and effectively they mean it. So we want to bring inflation back down to 2%. That's what is an acceptable level of inflation. A healthy, apparently, a healthy amount of inflation. And that's why if you're going to get a rate cut, you would expect to be there at target, and we're not. Anyway, this video is going all over the place. So I don't really see any reason for a rate cut. But stranger things have happened. And if you do get a rate cut, it would obviously be bullish for the market. But you know, that's taking place next week. So long story short, this weekend, or at least today, may see some bullish behavior across the board for Bitcoin and altcoins too. Now this is certainly going to be a video for another day, but the word alt season will start to creep into fashion again. As soon as we reach this area of 58.3, but 58.5% dominance, that is, if anywhere, a place of a potential rotation. Huge support here leading on to the massive move of the last bull cycle where Bitcoin broke out and went 300%. And altcoins didn't do a single thing, basically. In fact, some altcoins went down in that period, leading into the alt season. So we've been on a slow and steady increases on the dominance chart since, well, September, October, since the bear market, really. We're looking to see it hit this area and find a rejection that maybe just comes all the way down to 52.6, and that would be a golden cross, a retest of a 200 exponential, or maybe even the simple. And that would be an alt season. We've also got bearish divergence on the high term time frames. Money flow index relatively high but not overheated. So there's evidence to see a rotation or at least some alt season take place from this area, and that would be decent because we measured it out yesterday. If we were to get it, roughly you'd be looking for about a 10% pullback on the dominance chart. Alt season is what that would be. So you can anticipate that, you can expect that, but you may not receive it because, as we can see, I was doing my impression of Michael Saylor last night. There's only one crypto asset, and it's called Bitcoin. And that is basically what is going on in this chart. There is only one crypto asset, and it is called Bitcoin. Others do exist, and you can find opportunities within them. You can profit from them if you're careful. But really, it's a matter of just holding Bitcoin, isn't it? It would appear. But we've been here before. I remember this around here. I remember my friends who are Bitcoin maximalists, as they like to think themselves of it. That's fine, but I remember them when everyone was rallying, they were saying, "Oh yeah, don't you see? Altcoins have finished forever. Bitcoin's going up several 100%, and altcoins are not doing anything. Do you not realize? that they're destined to die forever?" And I was thinking, well, it certainly would appear that way, but you know, just like for the most part, people cannot see what they can't see. They fail to imagine what could take place in the future. And just in a typical noob master fashion, the tables turned. Bitcoin actually went down 35%, while altcoins rallied up hundreds and hundreds and hundreds of percent. There's only one crypto asset. Oh no, there's not. There's hundreds of crypto assets. So we may be seeing something like that. However, this is only the first stop. And that this is just based on horizontals. If we don't get rejected here, then yeah, there is only one crypto asset. It's called Bitcoin until we reach about 64% dominance, and then there will be multiple crypto assets again. And it was quite a long video, but long story short, what I'm looking at is a resistance on a higher term time frame for Bitcoin, looking for a rejection here, hopefully make a higher low over on the shorter term time frames, leading into Monday, where we see what how stocks behave at its resistance. Again, it's at resistance, and if they break out, we're looking for a move, not just to the 63, which you might even see this weekend, but next week 68, and potentially even a breakout. I can tell you now that if we did get a breakout of this descending channel, it would be really bullish, and you'd probably see a new all-time high on Bitcoin very quickly, maybe even as soon as that week that we see the breakout. It would be extremely bullish. And a rate cut would also emphasize that, especially with gold breaking out as well. I think there's a very good chance that that's how it would play. And just to finish it off and just round it all up, this has always been the projection, hasn't it really? This has always been the expectation. Remember, don't lose sight of the goal. And this is and continues to be the goal. The general fractal of the total two. We were going to consolidate throughout the summer. I said that in December. And here we are, end of summer. Still consolidating, basically. But I said it like a million years ago. And I said, when the summer's ended, the consolidation should be due to end, just based on a simple time projection. And then at some point towards the end of this year, into next year, the breakout and the continuation continues. The only thing that would really stop this, as far as I'm concerned, would be a fundamental reason for it to stop. Some serious issues within the financial industries, global events, anything like that could stop it in the short term. But remember, the Fed haven't lowered rates, have they? They haven't. They will only lower them when is required, in my opinion. And if some stuff happens in the world, they may be required to lower those rates. And wham bam, thank you, man. You get the dump and then you get the pump. So either way, whichever way you cut it, I would expect this to rally towards the end of this year, into next year, generally speaking. And never lose sight of that. I certainly haven't, which is why I've been riding 50% in the market while the portfolio goes down, because I'm confident that this is how it's going to play. The other 50% can be deployed hopefully soon. Ideally, if we get a rejection on that dominance chart, it'd be unbelievable. I'll not just pump a load of my money back into the market. That other 50% that's in cash, a lot of that will be going in, but so will some of my Bitcoins. They'll be flipping around into other altcoins looking for some serious opportunity to maybe even double the Bitcoins that I throw at them. Anyway, that's it. It's a long video. It's going to be a decent weekend, I think. But while we push this resistance with a view to hit 63,000 over the weekend, be guarded, because that is still an area to get rejected from. And also recognise that stocks, as much as they are looking good, they are also pushing a resistance into Monday. So we'll just take it one step at a time. Let's not bite off more than we can chew. It's been decent. It's been a decent little rally, and it's worked out more or less as expected. Bang, bang. We said if you're going to get a bounce on Bitcoin and looking for a bouncy reversal time, it could be as much as a 26% move. So far we're more than halfway there. So, like I said it. We see it. Right again. Absolutely right again. On the money. Love it. Right, take it easy. Hope you have a nice day. Take it easy.